Hey guys, Alex from MarketWise Asia. Today it is the 22nd of September 2023. So I'm not be doing the usual Facebook Live and also the YouTube stream. So that's why I'm doing this video for you right now. So as usual, before I start this video, okay, a disclaimer first, whatever I share in this video is just for education purpose, not a recommendation to tell you what to buy or what to sell. So let's kickstart this session right now. So before I kickstart, right, just to let you know, the Telegram channel, YouTube channel, Twitter, TikTok, please subscribe and follow the various social media channel. Of course, the more important one that I think you should follow is actually the Telegram channel. A lot of price mover, market news information, I will share them out. And if you're watching this on YouTube, I believe so, okay, for this video, please follow and subscribe to our YouTube channel. Okay, Twitter is where I usually share some of the trade ideas and such. TikTok more for fun and entertainment. Okay, all right. So another one before I kickstart, right, it is to register for the Market Insights Virtual Summit that's coming up real soon in less than a month's time. Okay, if you're watching this on YouTube, you should be able to find the link in the description box. On Facebook, you should be able to find the link, okay, at the first comment section over here. So this is the Market Insights Virtual Summit that's coming out on the 14th and 15th of October. Once again, this summit is proudly supported and sponsored by IG. So very simple, just click on the button here, name, email, and mobile, and you are good to go. And as usual, we have our lucky draw and also a bonus training video. This bonus training video, it is actually by Jaytun, founder of Swim Trading over here, and he'll be giving you this bonus video, maximize your trading success with the SR swing strategy. So this is a very good video. So for those who actually missed the July face-to-face session, so this is what actually Jay mentioned about. If you actually so watch it already, this will be a very good revision for you guys. I believe most of you guys have not watched it. Okay, so this is a very good SR string strategy. So please register for this event, and the keynote speakers will be Adam Grimes, okay, and Daniel Dubrovsky from DailyFX. So do register for this event, okay, and let's see. Okay, so let's kickstart this session right now. So I believe you guys you should know already right now, as I'm doing this video, is a Friday afternoon. So on Wednesday after midnight, that's Singapore time, Thursday early morning at 2 a.m., the Fed actually announced that they will keep the interest rate unchanged, but they also signal that there will be one more hike. So if you take a look at the CME watch tool over here, so September, it's gone. The next FOMC meeting will be in 40 days time. That will be in 1st November. Based on the probability, right? Okay, the market is pricing in that, the Fed will keep the interest rate constant at 5.25 to 5.5%, okay, in the November meeting, okay, about 75%, okay, 75% chance that you keep it constant. So if you take a look at the December meeting, right, okay, this is where the probability change a little bit, okay, there's about a 40% chance, okay, actually it's 38.5 right now, about 40% chance that the Fed will hike another 0.25% in December, okay, so from 5.25 to 5.5 to 5.5 to 5.75. So this is something that you should take note, okay? So this is more of a hawkish, okay, announcement over here. I think you can see, inflation, it is still at an elevated level, okay? It is still far from the 2% level that the Fed envisioned it to be, okay? And given that the prices of the crude oil has been climbing up steadily for the past 1 or 2 months, okay, we are still not out of the woods for inflation yet. So, I think it's pretty normal that the Fed will continue, okay, to hike the interest rate. Okay, having said that, okay, I think during the day before the Fed announcement, right, I actually shared with you some data on the Telegram channel. That is the Fed Day movement. Okay, so this is the Fed Day movement over here. So let me share with you this over here. Okay, so let me try to zoom in. So you can see on the blue line, it is actually the past 8 FOMC meeting, the average price movement, okay, for the S&P 500. So this, the shaded area, it is actually post FOMC meeting. That's after 2 a.m. Singapore time, okay, when the Fed announced, okay, whatever things that Jerome Powell want to announce, like, okay. Okay, so you can see that, typically it's kind of flat, but you can see that the blue line over here, the prior 8 meetings, right? Can you see that after 2 a.m., the market will always took a dive first, okay, and then rebounded, and then dive down again, okay, towards the closing also. So the red line is actually on the Thursday early morning movement. It is exactly the same for the past 9 meetings already. Okay, you can see that, again, same movement. After the 2 a.m. announcement, price came down first, okay, and then did a rebound, okay, and then sell off towards the closing time. So exactly the same movement over here, okay. So to me, it is not a surprise. So we kind of anticipate what the market could do. So it will be the same for November and December, okay. Might not be, but at least it tells you, what to watch out for, right? Okay, all right. So right now, at least you know what is the movement during the Fed day. So you get to be prepared, okay, during the day itself. If you're doing intraday trading now, of course, okay. All right. And then, okay, so I also mentioned that, the second half of the September, it is bearish historically. So I think prior to that, I think early of the month, okay, I mean that, we're still debating whether it's going to be a bullish month or a bearish month. Of course, right now we know that it is a bearish month, and it seems that the Guru Larry Reardon forecast is not exactly correct, but nevertheless, okay, we are approaching the late September and to October, where it typically is more bullish, okay, after October. But having said that, okay, just let me share with you some of the data over here, okay. So it's not surprisingly, okay, based on seasonal historical data, okay, we are in the second half of September, and typically, can you see the shaded area over here? This is from the Carson research, okay. So this is the S&P average performance every single day, okay, from 1950 to right now currently. So you can see that based on how many years of data, okay, all right, about 80 years of data, that kind, okay. You can see that second half of November, you can see a lot of negative red days until the end of September. So if you tell me that there are more downside to go until the end of September, I won't be surprised. So you need to brace for that, okay? All right, I can see that after that, October, it tends to be a more bullish, okay, price movement, even at the early start of October. So from now to October, I think it is best that we prepare for a more kind of a bearish price action. At least, you shouldn't be surprised. Okay, that's what I'm trying to tell you. At least you shouldn't be surprised about that. Okay. And having said that, okay, let's take a look at the market outlook and the key indices. And short-term wise, right, it is definitely oversold. So just this is the S&P 500. Okay, this is the naked chart over here. So if you actually remember what I mentioned during last Friday Facebook Live and YouTube stream, that is on the 15th of September, 1 week ago, last Friday, right? I said that the S&P 500 is stuck in a range, okay? So between the 4550 and also the 4480. So I say that, as long as price, is stuck in a range here, it is going to stay there, okay, until it moves out of the range. And it happens that, okay, as not unpredictable, the price actually move out of the range after, okay, the Fed announcement, FOMC meeting on Thursday morning over here. So you can see that over here. All right, so this was the Fed day movement, and yesterday there was a big, huge sell down over here, was down about 1.69 on the S&P 500 futures over here. And if you look at the price action over here, okay, on the Tuesday over here, I think it might trap a lot of people over here, okay, for those, okay, who entered on Tuesday. So this is a pin bar over here, or some people say it's a hammer candlestick pattern. So this is one of the another reason why I don't like the hammer candlestick pattern or the pin bar pattern. can see that, you know, there's a long shadow over here, okay. It might trap some people to think that there is a reversal, hunted the low over here and then reverse back up. Of course, next day is the FOMC meeting now, okay. But nevertheless, I think there will be people who went long, and after they went long, okay, price came back down again, okay. And then of course, price continued to head lower. So you can see that after the Fed day movement on Thursday morning over here, okay, that's Wednesday midnight, after midnight, you can see that after it broke the 4480, price just continued to head down lower. So having said that, okay, please don't try to short now, okay. I think the market, it is oversold already. You want to short, okay, you should be shorting at a relatively higher level, like here, okay. Not here when the market has been a very big down day, then you went into short, okay. That's why I always say, okay, if you short when the market is at a low, okay, that is called TMP, Tao Nao Pai, okay. All right, of course, it doesn't mean that the market cannot go lower. It can still go lower. It just means to me that, you know, your risk is much higher now if you go short now. There's a very high probability that, you know, the market have a technical rebound, okay, or so something like that, okay. Right, so the risk is much higher now. And if you look at in the usual indicator that I put in the cloud and the CPR, you can see that, you know, right now we are below the central pivot range already, okay. Bearish, below the cloud, bearish also. So we are below the cloud and the central pivot range over here. And this trend line was actually the prior trend line that I have drawn, okay, for many months already, okay. As you can see that, you know, price hit this trend line over here and then came down, okay, and then hit over here and go back up. So right now, we are below this key trend line over here. So it doesn't seem to be very bullish right now, okay. All right, has broken this trend line, unless you tell me that within the next few days or so, that's next week trading day, price can move back up again. If price continue to stay lower, then there could be more downside to go. But having said that, the possibility of a range bound movement or a slight rebound, it is possible. Okay, if you take a look at the S&P, you know, 500. Okay, no, this is the Nasdaq futures. Okay, again, price has broken below the cloud and also the central pivot range. And for the Nasdaq, you can see that there is this swing low over here. This swing low over here. So this is the swing low over here. Okay, so it's at about 14,800. Okay, at about 14,800. All right, so I believe the market will went on and test this low over here. At least go and test this low, because there is a lot of liquidity out there, and a lot of people, you know, whether it's professional or the retail trader, will be placing their stop loss at this level. Okay, and if you look at the Russell 2000, the small cap, it is the weakest among the key indices. Okay, it is also, you know, at a low already. So, you know, let's see whether price could went down and test this low over here, which is at somewhere around here at about 1777. Okay, thereabout. Okay, this is the Russell 2000 futures over here. Okay, and then for the back to the S&P 500, right? So if you actually put in the weekly pivot, okay, you can see that this is the weekly time frame. I know there's a lot of lines over here, okay, but not to worry. The key line that I want to ask you to see, okay, at this level, okay, it is the 4353 or 4350, like there about, okay. Turn the HD line over here, okay, 4350. Okay, this is the weekly level. This is the Camarilla short-term level, weekly level over here. For 4350 over here, you can see that this is a pretty strong support level. So if you back to the daily time frame, okay, it is here. So there could be some more downside to go, a little bit more, before price could stage a rebound or so, okay, which is in line with what we saw in Nasdaq, where there is a swing low over here. Price haven't touched yet. So there could be some more downside, a little bit more, okay, and then we shall see how price react at those level, or can be, you know, technical rebound or a range bound, or even go even lower. Okay, but we still have one more week before we head into October, so just be careful on that. So not the best time to go long now, and also not the best time to go short now, because price is at a low already. And how do I know that it is at an oversold level over here? So if you take a look at the S&P, okay, this is the okay, so let me go back to the stock chart. DP gallery chart, this is the decision point, which I mentioned quite a number of times during my live stream over here. So you can, at one glance, you know what is the trend, what is the breadth, and such. Okay, so the one that I'm looking at, it is the breadth over here. So this is the, oops, is it over here? Yeah, all right, the percentage of stocks above their 20-day, 50-day, or even 200-day moving average. This is using the EMA over here. Okay, so I can just click on it. So this is the market breadth. So you can see that, you know, right now for the market breadth, the percentage of SPX stocks above the 20-day moving average, you can see that it is at a low level right now. So you can see over here, you can see line. So these are the low level. How do you know it's a low? Based on past history. Okay, you can see over here. All right, right now we are only about 17.6% of the S&P 500 stock are above their 20 days moving average. So these are the low area, low area, low area. Okay, you see that typically, okay, when price actually hit the low area over here, okay, right, the low, price will stage a rebound, or so at least a short-term rebound. Okay, now we are at a relatively lower level, not at the extreme low, but at a low level. Okay, so a technical rebound could be on the cards over here. And for the midterm, right, percentage of stocks above the 50-day MA, we are also somewhat near the low, although not at the relatively low. Okay, all right. So, you know, I think it is good that the market can continue to sell off. Okay, the best is that it can sell until the end of September. Then I know that it will be a very good time for me to look for opportunity to go long. You get what I'm trying to say or not? Let them sell. And the sentiment on some of the various social media platform, especially I'm quite active on Twitter, it is pretty negative right now. So yeah, so this is the sentiment that I'm watching this on Twitter. So breadth market wise, right? Breadth wise, we are also at a relatively low. Okay, so this is the thing that I'm looking at. So having said that, okay, I've covered the market outlook and the key indices right now. So what you should be looking out for, okay, whether the oil price is a concern or not, or whether whether the mid cap or the mega cap that you should be watching to go long, okay, in October. Okay, I think not the best time to go long now, but I'm just prepping you, okay, what you need to watch out, okay, or anticipate, okay, what the market could do. Okay, so right now, okay, I think if you actually watch my, I think the last 1 or 2 weeks Facebook Live, I say that, you know, currently based on seasonal wise, you know, oil is historically in a, you know, uptrend, kind of a favorable, bullish kind of a price movement. So if you take a look at the crude oil, it has been up since July, so about up for more than 2 months already. Okay, not surprisingly, you know, inflation is like has went up a little bit higher, because crude oil, okay, is correlated to the inflation level. So, but there's a lag time. Okay, there's a lag time. So for the CPI, you know, that kind of things, you know, PPI to drop, it might take another 1 or 2 months to really to come down. There's a lag time of about 1 month or so. So having said that, you know, so price, I mentioned that price, when I see it last week or so, I said that, you know, don't go and short now. Seasonally, you know, it is still favoring the oil to go higher. So indeed, price has gone up higher or so. So, okay, when is a good time, you know, to short the crude oil, okay, or at least, okay, anticipate that the crude oil could come down, okay, or at least not to go long or so, okay. So just to share with you some data over here. So for crude oil, okay, bearish price movement, right? Okay, based on the USO ETF over here, right? Okay, this is the USO ETF or ETF. Okay, the historically, seasonals, right, from the 10th of October, all right, until the 14th of November, okay, for the past 11 years, 82% of the time, okay, it closed lower, which means that out of the past 11 years, 9 years, it ended negatively between this period from the 10th of October to the 14th of November. Okay, so right now, don't get into the way of oil. Don't try to, so-called, gay kiang and try to short massively. So I think right now, this is not the best time yet. So we want the price action and, the seasonals to be confluence, to be in favor, okay, for us to go short. If you wanted to go short, okay, if you can do nothing, that's fine as well. So from the 10th of October, that is somewhere around here. Okay, so at the meantime, okay, I won't be shorting oil. Let it run its course. Okay, so it can be range bound a little bit, okay, or it can go higher also, or it can come down lower. But for now, if I really want to go short, okay, the time favoring, the opportunity is actually into early October. Then I'll be looking for opportunity to go short. But first, of course, price action, you still need to watch the price action first. So at the meantime, I won't be shorting oil at the moment now, okay? I just, let it go, okay? There could be some more, a little bit of upside to go, or at least a range bound. That's my personal opinion, okay? And, okay, as I mentioned, right, just now I say that, yeah, October, prices start to become more bullish, right? That's where the market will most likely turn, okay, based on seasonality data over here. But what you should be watching out, okay? In fact, the first market to turn is not the big cap, okay? It is actually the small cap. No, sorry, it's the mid cap. In fact, okay, I'll share both with you, okay? The mid cap, it is actually, IJH. This is the ETF for the mid cap. Okay, mid cap IJH over here. This is the mid cap. From the 3rd of October until the 23rd of October. The window is pretty short, okay, less than a month over here. For the past 14 years, 93% of the time, it closed higher, which means that out of the past 14 years, 13 years, it closed higher between 3rd of October to 23rd of October. Okay, whereas, okay, the key indices that we are always looking at, the S&P 500, okay, the ETF is, I think most of you should know, this is the SPY, SPY, okay. The actual bullish movement, in fact, started later from the 12th of October until the 25th of October, okay, for the past 10 years, okay, 80% of the time it is bullish, which means that for the past 10 years, 9 years, it closed positively, okay, between 12th of October to 25th of October. So if you really want me to look for opportunity to go long, right, I will be instead looking at the mid-cap stock first instead of the big cap, mega cap, that kind, which means that your Tesla lah, your Nvidia lah, or Microsoft, Amazon, that kind. I won't be looking at them first. Be looking at the mid cap. So if you don't want to look at the individual stocks, then of course the ETF will be a good way to trade or to have a position in it. Okay, all right. So these are some of the trade ideas that I'm to share with you guys over here, the oil and the mid cap over here. And of course, I also want to share with you the seasonal advantage over here. I think I mentioned last week over here. And right now, we are preparing into the quarter 4, the quarter 4 report from October, all right, to December. Okay, it is out already. Okay, so you can head over to the link over here. You should find in the description box in YouTube and also on Facebook as well, on the first comment. I'll go through some of the example over here, new examples over here. So right now, okay, we have early bird discount until the 30th of September, the end of September. Use the coupon code 23 off over here. So this is what you see over here. Okay, this is the seasonal advantage. You will get the PDF report and also the Excel spreadsheet if you get the Plus version. Okay, stocks plus ETF and the free Excel data sheet included. Okay, so of course the ETF data will include the industry, countries, commodities, the different themes, the investment styles, okay, fixed income. So it enables you to have a bird eye view of the market, okay. So you can track what is actually moving or not moving in the grand scheme of things. So if the usual price is 149 Sing dollar. So if you get it within the early bird period, okay, 23% off, just click on the buy now. All right, insert the coupon code 23 off over here. Oops, 23 off. Just click apply. Maybe about $114. Okay, it is definitely less than a meal. Okay, at a restaurant for 3 to 4 packs. Okay, all right, and you have the potential to make more money from that. Okay, so just go to checkout, free up your name, email, mobile, and you're good to go. And for this platform, you can pay by Google Pay or Apple Pay, or if you don't want, okay, use the normal credit card. That is fine. I think Google Pay or Apple Pay, that's the fastest. Okay, yeah. So having said that, okay, so back to this again. This seasonal vantage, right? If you just get the pro version, it is only US stocks and data file is not included, only the PDF report over here. Okay, so to value add for this one, I mentioned last week also, okay, if, okay, I feel that moving into October, November, December, I think the market, in fact, is not turning up, but going down, okay, I will provide the additional bonus bearish data for you at no additional cost, okay, all right, at no additional cost over here. And I will also provide the weekly exclusive updates. Typically, I will share it with the Seasonal Vantage insiders on a Monday afternoon. So I will share with you what are the watch lists that I'm looking at, what stocks, what sectors, what industry, what ETF that I'll be looking at for this coming new week also. So actually, okay, Seasonal Vantage or seasonal can help you anticipate market move and make informed decision. That's very important, okay? Without looking at the market also, I already know, okay, in the coming week, what I should be focusing on. So that keeps my watch list really tight over here, okay? Just to share with you case study, okay, with what I shared with the member for this week. Okay, so let's get started here. So some case study over here. Okay, so for this week, okay, I shared with the insiders over here. So this is the video that I sent out. So SVI, this is the Seasonal Vantage insiders over here. I sent out on the 18th of September. Okay, this is a video that I did on the Monday afternoon. So this is the ETF list for September. This is a bearish data over here. So I mentioned I will send them at no additional cost. So these are the few ETF that sectors that I'm looking at. Can you see that there are a few over here, okay, that I mentioned specifically, okay, that I'll be watching to go for a short, okay. For example, okay, this is the VHT. This is the Vanguard Healthcare ETF, very similar to the Spider XLV sector ETF. And the other one that I'm looking at was the IYK, the Consumer Goods, which is the Consumer Staple ETF, okay. All right, so I also mentioned about the VGK. This is the Europe ETF. So these are the ones that I said that, hey, if you want to short, okay, this is the list that you should be looking at, and I'm watching out for this few ETF to go for a short. Of course, I won't tell you the date over here. These are only meant for the Seasonal Vantage insiders. Of course, if you join, you get access to this data as well. So again, okay, let me share with you some of the data that I shared with them over here. Can you see that this was the video that I sent out again? When I first mentioned that, I said that, hey, there was a potential short over here. Okay, I'm watching this healthcare. Okay, that could be more downside to go based on seasonal data over here. It can have more downside. So you can see over here, I mentioned that VHT. Okay, and I said that, hey, there is a wash and rinse pattern over here. And, if you want to go for a short, okay, you could short at the market open on a Monday night, okay? And if you take a look at this was the price action. You can see over here, this is the VHT. Of course, the market overall went down. VHT also went down as well. So you can see that this is the VHT. All right, so when I first mentioned that, okay, price was over here, okay, and subsequently price came down. So this was a very good shot as well. You know, definitely at least a 1:1 reward ratio. I have about 1.5 risk to reward ratio now already. So this was a very good trade for me as well. I took the trade for this, okay. And secondly, okay, just want to show you some more is that this is the, not this, it is this, okay, INDA. Another one I share is the INDA. All right, this was based on the prior week. I said that I'm still watching this because there's a time frame. I said that, hey, you know, INDA, you could take a look. I shorted at this level over here, INDA. So I also mentioned to them during the video 18 that I have a short position on the India ETF based on seasonals within a period of time. Okay, I think this is a good shot as well. You can see over here, this was a good shot for INDA. Yesterday, I actually have taken profit on INDA. Okay, pump. You can see that I shorted at somewhere around here. Okay, and then wait for a while, and then price came down. So it was a very good shot. So this is how the seasonality data can help you. It anticipate market move for you. I already know what to watch out for even before, okay, the coming week, the next week also. I know what to watch out to go for a long or to go for a short. Can? All right, another one that I mentioned earlier, it is actually, is it this? This is INDA, no. Okay, it is, as I mentioned, right, this is the VGK over here. This is the European ETF over here. So this is the data that I actually shared with them. So you can see that VGK, Europe is also one of them. VGK, when I first mentioned over here, it is somewhere around here. Okay, right, but of course, not every single trade ideas can be actionable. Like for example, VGK, I didn't go for a short because, you know, even though technically it went down also, okay, as expected, but on the day itself, price actually get down a lot lah. So not within my price limit to actually go for a short because it get down quite a bit already lah. So I didn't enter. But again, you can see the power of the seasonality, okay? European ETF, you know, most people won't take a look one, but, you know, I still take a look. There's a potential short. I tell them that, hey, price also continue to go down during this period of time, okay? And the other one, the last one that I mentioned is actually something, is a commodity, okay? We can diversify out of the usual equities I mentioned about India ETF. And the other one I mentioned last but not least, okay, is the uranium ETF. Okay, you can see that also I mentioned during the video itself. Okay, I said that, hey, you know, based on seasonals, now is the right time, okay, to look for a short in the uranium. Price has been running up for quite a number of while now, okay, but the price action look a bit parabolic, and based on combining with seasonal data, it seems like a good shot. But I also tell them that, hey, actually this pin bar I don't really like, okay, so hold for a while first, okay, see how it goes. The price will continue to go higher, but if it doesn't, then I'll be more inclined to go short. But eventually, okay, I went for a short on the uranium ETF as well. So on Monday, this was how the price action looked like, okay? So if you take a look at uranium now, URA, okay, price also came down yesterday, okay? All right, I'm still holding on this position, but right now it is already in profitable position. I'll be trailing my stop. So you can see that, you know, on this day over here, okay, after I say they pause for a while first, okay, even though the seasonal data say so, it might come down. But, you know, on this day, there was another long shadow bar, which I thought the market could continue to go higher, but it did not. Okay, so on this day, price came down lower. So I went for a short on that day over here, and then yesterday price came down over here. So this is still a profitable position. So all in all, I just want to share with you that, you know, I am providing you weekly updates on the seasonality data, on the seasonal vantage. Okay, this is done on a bonus value added service. Okay, typically I don't do that, but I thought that, hey, you know, people need to know what they are be looking out for, because there's still a lot of data, okay, in the spreadsheet and also in the PDF. So I will kind of fine tune with you guys. I have a watch list, what I'm looking at. So at least have a clearer idea on, you know, what you should be looking to go long or looking to go short. Okay. So I think that's definitely very useful. So if you are still deciding, sitting on the fence, you know, whether to get this seasonal vantage data reports, right? I I'm not sure what is your consideration. It's not expensive. It's definitely very affordable. Okay, let me know your concern. Okay, I'm not very sure why. Okay, if you haven't bought it yet, but of course there are quite a number of you already bought it already. So welcome to the insiders. Having said that, okay, once again, I'll just let you know that these are the things that I'm providing for you guys. Okay, the seasonal vantage insiders. Okay, the data can go to marketwiseasia.com/sv, or somehow the link doesn't work, can go to the direct side. Okay, you should see the link in the YouTube description box or in the Facebook first comment. Early bird discount, use the coupon code 23 off. This coupon code is valid until the 30th of September. Okay. All right. So I think I covered quite a bit already. Okay. I talked about what the market could do. Okay. Second half of September is typically bearish until the end of the month, October. Okay. When the market tends to go a bit higher, and I'll be looking at this mid cap first instead of the big caps, and of course the seasonal vantage where it can help you anticipate market move, and I'll provide the additional bonus data at no cost if necessary. Okay, and also the weekly exclusive market updates for the insiders so that you know what to watch out for. Okay, for the coming week. Okay. So of course, seasonality, we cannot see the future, but we can see the past. Okay. So with that, okay, I wish you a very good weekend ahead. Safe trading, and I will see you guys again next week. Thanks so much. Have a good weekend. Bye-bye.